If you can hold through volatility, then Bitcoin is probably going to outperform every asset on the planet.
So you're fully convinced of this now.
Yeah, I mean, people ask me all the time, just because like I'm my job is a market analyst. I do daily research for Bitcoin Magazine's like premium product. I like advise for a hedge fund that's like a Bitcoin fund. So they ask, what are your intermediate term, short term market predictions? And like the reality is like it's entirely dependent on this macroeconomic outlook, on liquidity, and like, to say with certainty what's going to happen is a fool's errand. But over the long term, we can kind of look at this really, these binary paths. But really, it's not binary. It's like there's only one option, and it's additional credit expansion, additional monetary expansion, and kind of know where this is going. But even in the kind of other scenario where we see a deflationary collapse, like you don't want to hold money in the bank, you don't want to hold bonds, you want to hold something. Like, and this is kind of going to the Ray Dalio framework. Why do you hold gold in a debt crisis? Well, you hold something with a production cost. You hold something that is not someone else's liability. You hold something that you can secure yourself. And so ultimately, and is very hard to produce. Like you can think of that as like a stock to flow ratio. Well, the good news is Bitcoin is all of those things, and it's actually way better than gold. So in either kind of case, at the end of a debt crisis, I think Bitcoin is that asset you need to own.
Yeah, I mean, that's the thesis. A lot of Bitcoiners support, but the thesis hasn't fully played out yet. You could argue that a lot of people don't consider it that, when some people argue that Bitcoin is risk off. So if we see a crash, some people think that Bitcoin might crash. Part of my own portfolio management as a consideration is that I'm like irresponsibly long Bitcoin, right? I'm 95% Bitcoin. But I was thinking, should I just like take 10, 15%, put it into gold, just hedge that Bitcoin a little bit, just in case Bitcoin isn't the hedge that people think it is. It is still gold. It's still governments buying gold outside of El Salvador. Russia's stocked up on gold. China's stocked up on gold. I've done this a few times, Dylan. I've been going through that consideration. When I interviewed Callum Roche, he was like, was Callum 25, 25, 25, 25, or was he third?
I think he was third.
Equities, scarce assets.
And fixed income.
Yeah. He was like, whatever happens, you always got a bucket of the right thing. So you should be fine. That's like an evens way to play. I mean, I think you can just like change the dials a little bit. But I'm 100% convinced on the long-term thesis of Bitcoin. I'm not 100% convinced it plays out in the short term.
Yeah, and that's totally fair. I mean, honestly, if you're looking for more of an asymmetric hedge, I would say, and this is kind of a paradox because you see inflation at 50 or 40-year highs, but honestly, cash, and Lynn Alden phrases great. I'm not gonna phrase it exactly how she does, but like cash is basically it's a speculation over the short term, but long term it's basically a liability. So during these kind of deleveraging events, whether it's March of 2020 or 08 or even 2000 or any time there's a recession, if you can hold cash, it's going to appreciate against real assets. And that's what we've seen. I mean, Bitcoin is obviously volatile. It has its own market cycle, but really since November, every asset's gotten killed. Most assets.
So you think holding cash is good?
Yeah. I mean, like I hold a cash position, and I've been building one along with my Bitcoin stack, but ultimately, like you don't want to hold cash over the long term. Over the short term, there is an asymmetry there because during a credit unwind, which I believe we are in, you could see a rapid appreciation of your purchasing power. Like long term, it's politically a guarantee that your cash is going to erode.
Just explain that again. So why during an unwind does your purchasing power increase?
Because ultimately, people become forced sellers of their assets.
Okay.
And basically that's a result of the credit system unwinding. And so risk premium kind of unwinds. People like financing, like broad market liquidity in general dries up. And so cash in that scenario, although, because everybody levers up during the credit expansion cycle, everybody is going risk on, but during a risk off period, cash, I guess cash is king.
Cash is king.
Although the long-term game is that cash is ultimately trash. And so, I think we're in a weird spot in this economic system, this Keynesian like end game, if you want to think of it, where people are forced to kind of play hot potato and guess. But ultimately, I mean, having a stack of cash isn't a bad idea, but over short to intermediate term. But I think long term, if you're just simply DCAing Bitcoin with some of your disposable income, as well as having maybe an emergency fund in U.S. dollars, I wouldn't hold emerging market currency cash. I would definitely just because of how this global monetary system is set up, everybody in the world is implicitly short dollars, right? Like there's so much dollar denominated debt out there that essentially what's happening is that during a broad-based market sell-off, there's a bid for dollars and everybody's short dollars. Like think of a short squeeze. That's what's happening, but with the fiat currency. But ultimately, the Fed, politicians come in and they quell that short squeeze by debasing, right?